Welcome to the last panel session of the day, Regulatory Framework in Malaysia and its Evolution along with the Digital Economy. Now, moderating this session will be Mr. Samir Bandaogo, Economist with the World Bank Malaysia, whom I'd like to kindly call upon to further introduce the speakers. Over to you, sir.
Thank you. Thank you very much for this introduction. And welcome to the members of the panel, and also greetings to all the audience members that are still tuning in and listening to us after all these long sessions. And I also understand that we might be standing between you and your dinner or family time. But I hope you all settle in and ready for an enlightening conversation and exciting conversation about the regulatory framework of the digital economy, specifically Fintech in Malaysia. So my name is Mahama Samir Bandaogo. I'm an economist with the World Bank based here in Kuala Lumpur, and I will be your moderator for today's event. But if we take a step back a little bit, so the Malaysian economy in the last 5 years has grown close to about, maybe 5% annually. And the World Bank estimates that it would likely transition finally to becoming a high-income economy within the next 5 years. And the digital economy played a big role in the recent economic success in Malaysia, given that it contributed up to 20% of GDP based on government statistics. Right, so the growing middle class in Malaysia has now become, or the digital economy or fintech in general, is now part of the lives of millions of Malaysians, right? And the reason why that is because the growing middle class and then mobile phone penetration rate and strong government regulation allowed fintech to flourish in Malaysia, ranging both from digital payments, mobile wallets, and all the way to P2P financing, crowdfunding, and cryptocurrencies, and so on and so forth. And Malaysia is actually, in terms of regulation, is ahead of the game because it was one of the first countries in ASEAN to issue regulatory guidance for P2P financing and crowdfunding, and so on and so forth. But that regulation is going to have to evolve with the rapid changes and development in fintech for the coming years. So it's my pleasure. We have two experts here to help us make sense of all this. And without further ado, I would like to introduce Glen Taske. He's the director for financial stability and supervision, as well as payments and settlement system at the SEACEN Center here in Kuala Lumpur. Hi, Glen.
Hello, Samir. Nice to be on this panel with you and the other distinguished panelist, Mr. Wei Min.
Yeah, it's good to see you. The SEACEN and the World Bank are actually neighbors in Sasanaki.
We are in Sasanaki,
yeah.
So.
And next we have Mr. Wei Min. He's executive director for digital strategy and innovation at the Securities Commission, Malaysia. Hi, Wei Min.
Thank you for inviting.
Thank you. All right. So, what do you think? Would you like to talk a little bit about your respective institutions before I start asking you some of my questions, maybe, or should we jump right into it?
I'd like to introduce the SEACEN Center, okay. Samir, if I could briefly.
Of course.
And first of all, I have to make this disclaimer that the views that I express are those of myself and do not necessarily represent the views of the SEACEN Center, Bank Negara Malaysia, or any of the 18 other SEACEN member central banks and monetary authorities. The SEACEN Center, which has been located in Kuala Lumpur since its founding in 1982, is a Malaysian organization which is supported by the 19 member central banks. They pay into our budget. Beyond the 19 members, we also have 16 associate members and observer central banks that also participate in our programs. And what do we do for them? We organize international training courses, high-level conferences, seminars, policy summits on central banking topics. We also engage in research, and we do a limited amount of technical assistance. And we cover in our 35 stakeholder central banks and monetary authorities, we cover pretty much all of Asia, from Iran in the west to Fiji in the east, with the exception of the former Soviet republics of Central Asia and some of the Pacific Islands. And I myself have been at the SEACEN Center for 3.5 years. I'm an American from California. I've been outside the US for 25 years as an advisor to central banks and other responsibilities. So that's a little bit about me and the SEACEN Center. I'll pass it back to you, Samir.
All right. So I guess if we start talking about, central banks and digital currency,
yep,
we're in good hands today. All right. So, Mr. Chinwe Min, would you like to talk about the Security Commission a little bit before we get started?
No, I think we should. I mean, considering of time, we should just go straight right in.
Okay.
And
all right. Perfect. So my first question is to you, Glenn. So as you think about fintech, it changes quickly. It's rapidly moving. So it'd be interesting to see, because it's keeping regulators on their toes to make sure that they have rules in place that govern all these activities. So maybe you can give us a sense of some of the good elements of good fintech regulation.
I'd be delighted to do that, Samir. And I know that the viewers have already heard from the fintech practitioners, and now it's time to hear the regulatory perspective. And of course, I do not speak for Bank Negara. I am a former regulator from the States, and I do have very strong views, which I'm going to explain in the next few minutes. I just want to build a little framework of how to think about the regulation of fintech. To me, the objectives of fintech regulation fall into 3 main buckets. First of all, we have consumer protection and treating customers fairly. And that also includes data protection because it's heavily data reliant. This is the digital economy. The financial services sectors where the digital economy is most pronounced, it's all based on data. So consumer protection, number 1, financial stability, number 2, and that's a main mandate of many central banks, whether it's explicit or implicit. You want to keep the financial sector stable, you want to avoid financial crises, and then you also want to minimize the impact of financial crises should they occur on the real economy. And finally, the all-important objective of preventing money laundering, terrorist financing, and then a new avenue, preventing the financing of proliferation of weapons of mass destruction. We need to do that. So those are the 3 main objectives. And the objectives are directed at what I consider 3 main types of fintech activities. First of all, we have lending, including what's called online marketplace lending, peer-to-peer lending, goes by a lot of different names, alternative lending you sometimes hear. Second is payments, including e-money, digital wallets. You could even bring in digital currencies into that. And then finally, wealth management, which is more a matter of concern for the securities regulator. Now, there are some special cases which I want to bring up as the digital economy has evolved. And the first special case is digital banks. Now, digital banks, which are also called challenger banks, neobanks, virtual banks, again, the terminology is not standardized because these developments are happening very fast. And if you look at digital banks, the financial statements will look exactly the same as conventional banks. You have assets, liabilities, you'll see the same items on there. But they have no physical presence, and that's what distinguishes them from conventional banks, when you can walk into branches and deal with a real person that you can see and offers you coffee and all of those good things. The other special case I wanted to talk about is the big tech firms providing financial services. And by big tech, I mean, you know, the usual suspects, Amazon, Apple, Google, Facebook, Microsoft, Ant Financial, which is getting very active in Southeast Asia. And they had a little slip up a couple weeks ago when their IPO was stopped. But you know, they're still here providing financial services, growing out of Alibaba, the e-commerce giant. Tencent, who has WeBank and WeChat Pay. So we have to deal with them. Now, the digital banks have been generally embraced by the regulators, I think. Although, you know, they typically put limited numbers on the number of digital banks. And that's not because they don't like digital banks, but it's because, you know, any banking regulator wants to somehow put boundaries on the size of the market. You know, you don't want hundreds and hundreds of, you know, little bitty banks coming in. It's really determined by based on consumer demand and the size of the overall banking market. And regulators will generally require digital banks to have at least one physical office. Bank Negara, for its part, plans to issue up to 5 licenses for digital banks. And their motivation, they want to stress financial inclusion, that they want these new digital banks to extend formal financial services to people living in rural areas, low-income persons, members of minority groups, people who have been otherwise disadvantaged in accessing the formal financial system. In terms of the big tech firms, there's really nothing to be scared about, but there are concerns. And by big tech firms, I'm also including what is generally called the platform economy. So think of Grab. You know, Grab is also, you know, included in this, you know, because they're branching out into financial services. And here the basic philosophy is that there should be activity-based regulation. In other words, you know, obviously Google isn't only involved in financial services, so it's not like a financial sector regulatory authority is going to bring all of Google's activities under its regulatory umbrella, but focusing on those activities where they already have a mandate to regulate. You know, regulators are not going to regulate all of Facebook, for example. However, there's one caveat to that, and that's that entities fail, not just activities. So even if you're trying to regulate Google or Facebook or Amazon simply in terms of the activities, you also have to take sort of a, you know, keep in the back of your mind the stability of the overall company. You can't ignore that because if the company stops providing most of its services, it's going to starts having financial difficulties. It's going to start pulling out of the markets, and particularly maybe the marginal markets that it had entered into, you know, just to establish a foothold and possibly grow from that. Now, these big tech firms and even the platforms such as Grab, they have a huge advantage because of their enormous customer subscriber base. They have lots and lots of data. That's how the e-commerce giants got into financial services to begin with.
All right.
And they can start dominating the markets. So we could ask ourselves, for example, could Lazada start providing financial services in Malaysia? I mean, Alibaba is the biggest shareholder. And remember, Alibaba already is affiliated with Ant Financial. And so they're already, you know, they already have a track record in getting involved in financial services.
Right.
So
okay. All right, Glenn.
I'll pause there.
Sure. Yeah. We come back to you. I have plenty of questions. There's so much we can talk about in this space.
Okay.
But I just want to piggyback right on some of the things you mentioned about, fintech activity, right? So you mentioned two things, lending and wealth management. Mm-hmm. So I would like to ask Mr. Chinwe Min, maybe if you could tell us a little bit about, the overall digital and innovation agenda for the industry. And maybe you could provide us a little overview of the crowdfunding and P2P financing in Malaysia.
Okay, thanks, Samir, and thanks, Glenn, again. So I think from SC perspective, for us, digital is not about the technology, so it's about the whole business model and the market structure we want to do. So I think here within SC, we wanted to cover, when we set out to do the digital agenda for the industry, we are meant to actually achieve 4 objectives, and I'll cover it very quickly. And 2 of them may be relevant today, and we can cover the other 2, another time, another day. So the first one was access to financing. So this is when we were starting out this journey back in 2015. This is where we looked at who are we trying to help, how do we be relevant to the underlying economy. So in this case, we're talking about the micro and the SMEs, right? This is where I think we have created the guidelines for the equity crowdfunding in 2015, and then we subsequently have the peer-to-peer financing guidelines in 2016. To date, we have about 21 operators, and we have actually just crossed the billion ringgit mark, crowdfund in 2 months ago. So we have now successfully helped more than 2,600 micro and SMEs in the last few years, crowdfund more than R1 billion, as you can imagine. So that's kind of where we are playing our part to do this. In fact, I think during the last 6 months of MCO period, we have actually pleasantly surprised that some of this activity actually picked up quite well. That means we're playing our role in helping that. In 2019 and 2020, where we started to look at also other parts, so in this case, digital asset and the tokens included within our securities remit. So in this case, early this year, we have published our digital asset guidelines, where we actually look at another forms of fundraising. So in this case, we're looking at initial exchange offering. So these are that earlier on we talked about equity based and debt based, right? So now we're actually allowing some of the innovative business tech startup, if they are looking at alternative different ways of giving them additional channel to fundraise, in this case through tokenization, to do that. And that's kind of what we do for. So objective number 1, access to financing. The second part, the objective is to actually increase investor participation. So in this case, where we look at how do we become more inclusive, how do we play our part in actually, right, think about the people who wants money, in this case issuer, and then talk about people who can actually contribute to help. So from an investor perspective, in 2017, we introduced our Robo advisory guidelines. So in this case, where we're actually including I think 7 players so far has successfully been licensed as a digital investment manager. Within there, some interesting point to note, if you look at the last 6, 7, 8 months in the MCO period, we're beginning to see a lot of pickup. For example, Wahid Invest, we actually managed to to attract about more than 50 million ringgit in a small amount. So this is where we actually facilitated the spare change investment, right? People who have 50 ringgit, 100 ringgit, they can actually participate and saving for the future, right? So I think these are the area where we actually help do that. Within that agenda, in last year, we have our digital asset exchange. So where we actually facilitated the digital asset trading. So this again, introducing new ways to allow our investor to have more asset class to trade. Back 2017, we have also licensed our first digital-only broker, so in this case, Rakuten. Likewise, we also have our pure fund distribution through iFast. So these come under the objective of access to financing. The third one is actually institutional market. The only thing I would mention is that Malaysia have one of the most vibrant and successful bond markets. So we actually created what we call a bond and Sukuk information exchange. This is where you actually can access to look at anything and everything that ever fundraised in the ringgit-based bonds. You can look up there. Then this is actually facilitated and allowed this. The last point, which I won't cover more, is ecosystem. As we look at the whole fintech arena for us, we obviously not beyond just to equity crowdfunding operators or peer-to-peer financing operators or Robo or digital exchange, we also need the different parts of the ecosystem works. So in this case, we're talking about custodian, we're talking about trustee, we're talking about payment settlement, and then we talk about all the different parts that will make it work. And the point I will make is within there, we actually have the industry digitization program, which we have been doing for the last 2 years now, moving the whole industry along. So for broker, we have our bridge program. For fund manager, we have our fund management digitization group. Interesting to note here is, I think for a while now, we have been trying to push some of the corporate actions activities. With MCO, we were actually able to do, recently the e-AGMs, right? So I think for the longest of time, we were struggling to get everybody to go and do online. So we were able to do that. So many of the offerings and all has been well digitized in this case. So I think that's maybe I'll pause there. Maybe later on can take some questions.
So I guess maybe a quick follow-up to that. First of all, I want to say it's interesting to, again, it confirms that the digital economy in the time of COVID is more resilient to other parts of the economy. And then as you talk about, how activities picked up on this platform during COVID-19. So that's a very good, I guess, good point to silver line to think about as in this times of crisis. So I guess the next question I was going to ask you is that, so you think it's crowdfunding and P2P are gaining acceptance within in Malaysia, because it's the population in most countries tend to be a little reluctant to get on those platforms. So what's your comment to that? So I'm asking
Yeah, I think it's actually a pleasant surprise to us. We have just give you some stats, right? I think equity crowdfunding, just when we close a half year this year, by June, we have crowdfund more than 170% of what we crowdfund in 2019. I think we're going to close the year double what we closed last year, right? Wow. Some part of that we are playing our part. Think about it, right? A lot of the small and medium businesses, some people with great idea, they still want to use these businesses, and more than 70% of these people are actually tech startup and all, right? Then there is state, I think, just to give you some stats, in Q2 alone, probably because of MCO, why we see activity picked up, we have registered more than 1,800 angel investors, right? So these are our theory is that some of the higher net worth individual that wouldn't be able to spend their money in fancy dining, overseas travel, buying that Prada bag. So a lot of these plow into the industry. So we're seeing a good picked up within the crowdfunding. We see that in equity crowdfunding. We also see, I think I mentioned earlier, I think we have 90,000 more investors within the Robo advisory just this year alone, right? So we see them signed up. We see massive pickup in the Rakuten side, in the digital-only broker. So we are seeing that we can be a good additional avenue. The other point worth noting is also more than 50% of the investors in our domain are age 35 and below, right? So we're looking at, again, think about it, a lot of capital market product today are fairly high entry barrier, right? You cost a couple of thousand to enter. But today, with 50 ringgit, you can actually go into equity crowdfunding. With 10 ringgit also, you can also go into the Robo advisories domain. So that facilitated the inclusion agenda. Another fact maybe worth noting, in peer-to-peer financing notes, our average size for investor, average ticket size is 400 ringgit, right? So it doesn't cost you a lot to enter the market. So I guess it plays its part in this difficult period. At the same time, allowing our micro and SME enterprises still have access to debt financing. As we know, this period, financing tend to be a bit more difficult.
Yeah, right. That's very interesting, and I want to follow up on the first objective of financial inclusion. But I have a question for Glen first, and then we'll come back to it. So I understand that your main clients at the SEACEN are central bank, right? So yes. I guess maybe can you elaborate a little bit on what are some of the changes and development in fintech that are impacting central bank operations, or what are some of the risks arising there that are keeping out the central bank governor at night, or the other financial regulators there?
Okay, that's a very good question, Samir. what keeps a central banker up at night? Well, there are very, very rapid changes going on in the financial services industry. And I think that the central bank is usually, although not always, the main regulator of the financial services industry, at least as it involves banks. Some countries have separated that out into separate regulatory authorities. I think what keeps central bankers up at night is how best to manage the shift to away from traditional forms of money into the new media of exchange, that we're starting to see. I mean, whether it's privately issued cryptocurrencies or the stable coins or central bank digital currencies. Because every one of those innovations contains with it both opportunities and challenges. So that I think is one. And remember that before all of these new means of payment came along, most of our payments were digital anyway. You think of banknotes and coins, but they're only a relatively small fraction of the money supply in any economy. Most of what we consider to be money are bank deposits, that we transfer to one another, usually, using some device. We don't often, I mean, in Asia, at least I know in Malaysia, it's not as common as it used to be to write checks. Now, I'm an American, and I have to confess that we still write billions of checks every year. America is far behind other parts of the world when it comes to embracing these digital means of payment. But what is kind of bothering central banks, I think, is how do they navigate these shifts? Do they try to catch up with them by offering, let's say, central bank digital currencies? And central bank digital currencies have basically two main motivations. One of them is to respond to the declining use of cash in many economies. It's not happening everywhere. But if people are using less cash, maybe they would actually, for whatever reason, maybe the banknotes are dirty, or they're heavy, or for whatever reason, people are starting to use them less, and there are a lot of processing costs, and you have to safeguard them and so forth. A central bank digital currency is viewed as desirable from the standpoint of offering a liability of the central bank, which would be very safe. People would probably accept it. And maybe that would either substitute for banknotes and coins, or even accelerate the phasing out of banknotes and coins. So that's one motive. But the other motive that central banks have for wanting or studying, and many central banks are studying whether or not to issue a central bank digital currency. The other motivation is simply to keep up with the cryptocurrencies and the stable coins, and say, hey, don't forget about us. We are the central bank. We are the controllers of the money supply, and we've been issuing banknotes and coins for hundreds of years. And we don't want to be phased out in this activity. And so CBDC, as it's called, central bank digital currencies, is about kind of a push-pull, sort of motivation.
Yeah.
Concerning the cryptocurrencies in particular, and I know Wei Min probably has a lot to say about cryptocurrencies, but my personal view, and I was a regulator in the States, and I've been advising central banks on regulation and supervision for many years. My personal view is that cryptocurrencies will never really take off as a means of payment, that they have a lot of drawbacks, and that they'll continue to, in some sense, deteriorate, and you know, they're already being used for nefarious purposes. They're already being used as the ransom demand in ransomware. They're being used, you know, for money laundering and drugs and arms smuggling and things like that. I think with the passage of time, the payments aspect of cryptocurrencies will continue to deteriorate. And so my feeling is that a tremendous amount of intellectual activity, a tremendous amount of law, regulation, very dedicated public service professionals are spending, and private sector, you know, if you look at the law firms, the consulting firms, you know, that are getting into these, the technology firms, a lot of resources are being poured into the activity of cryptocurrencies, or maybe crypto assets in general, for very little societal benefit.
Yeah.
And
I was going to say, you're lucky that we don't have any of the industry actors on this panel. I'm sure they will come after you for making that statement. You know, I wanted to ask you a question about, because if you think about, you know, now having, you know, private digital currency and public digital currency, you know, this takes us back to why we started having central banks in the first place, right? Because before central banks, we had, you know, people issuing their own money left and right. Then we had a central bank to regulate that. Then it seems like we've come full circle where now central bank are going to have currency and then private actors also have currency. But so let's hold on that thought. I want to ask you a question about, because this kind of gets into this. I was talking to Mark about the central bank independence and digital currency and so on and so forth. So I want to ask you about this, but I want to go back to Wei Min and ask you a question about, go back to the first objective that you mentioned about financial inclusion. Because if you think about, you know, P2P financing, that's probably, you know, at least from an economist or that works for a development, you know, agency, financial inclusion is probably the main thing that we want to look at. So I really want to see if you could give us a sense of, is P2P financing in Malaysia really contributing to financial inclusion in the sense that is it really reaching people that would normally not be served by, you know, commercial banks? And if so, how are they doing that? Are they using, you know, alternative data? Are they using, you know, advanced technology to reach them and so on and so on and so forth?
Yeah, Samir, thanks for the questions. I think here there are different perspectives and different way to look at it. So Malaysia, in our view, to some extent, we were quite lucky that we're actually more than 90% banked, right? So most people would have a bank account. So that makes the investor participation relatively easy. To your question about inclusion, so I guess your question is more about the issuer first. So talk about the people who are served.
Exactly. Yes.
Right. So I think I do think that we are looking at least a particular sector that there are actually majority. I think there are two groups of people who would definitely come to at least consider peer-to-peer, right? So let me take a step back before we go to the peer-to-peer. So firstly, if you're an entrepreneur, if you have a business that you want to start, but unfortunately you have an idea and you have something to working, but you haven't generated a lot of revenue or steady stream of revenue. So the only currency you have is a control of your company. So this is where you do equity crowdfunding, right? So you know, in exchange for cash, you give up some control of your company. So when your business is underway, then you want to expand, you want to do more. That's when you have the ability to repay. That's why then you don't. Most entrepreneurs don't want to sacrifice their control. Then they will do peer-to-peer, which means that there is a debt-based financing or debt-based crowdfunding. So in this case, then because immediately after the campaign is closed, the next month they need to repay. So if we talk about peer-to-peer financing, a lot of time we're looking at working capital or capital for growth, right? So for those typical, in this case, again, in our space, there are two main types. One is, we call it invoice-based financing. At least there's currently we're working quite well. So those are, if you like, to some extent, backed by certain collateral. So because, you know, you can date 30, 60, 120 days credit that you actually can do. The other one is unsecured financing, which is working capital and all. Again, people look to peer-to-peer primarily looking at speed, right? So think about if I want something fairly quickly for a relatively small amount, a lot of times, even though there is already obtaining bank financing, so typically it's like a seasonal situation, say Chinese New Year, they're going to have a new trip, new order, new shipment, but they are actually at their credit limit already, right? So then they may be looking at peer-to-peer, which you can get financing. Most of our today peer-to-peer financing, the campaign typically close within hours, or if not just days, right? So you can get your financing fairly quickly and for relatively small amount, right? So ours is as small as a couple thousand, and our average size of peer-to-peer financing today is about 100,000 ringgit. Right, and the average tenure is between 2 to 4 months. Right, we did not stipulate the period, and this is due to the current COVID. Prior to COVID, we are looking at a bit higher amount and longer period. So when we look at that, we are typically facilitating people who, you know, and the one that they're kind of unable to get bank financing, either is speed. The other one is what we have done is we have encouraged a lot of peer-to-peer financing operators to get alternative data. So in this case, let's say if I am running a e-tailer on an e-commerce platform, I can show to you, if you're facilitating my settlement, then every month my cash flow is positive. In the traditional banking, typically, if you're a banking institution, you look at what hard asset you have, your last 3-year track records and all. So if I just start out, I have 6 months, 12 months, but I can show you every month I positive cash flow and all. Typically, they tend to struggle a little bit. If they have a personal good credit, they may still be able to get that. But when you come to peer-to-peer, then you'll be able to do. So to some extent, we're looking at the prime of the subprime sector. So from that standpoint, we're looking at people who can have the propensity to repay. What we have to encourage is you can still look at your traditional 5C model, but you supplement with some of the data today that you don't have with other alternative data that help you make that financing decisions, right? So in this case, how do you do credit assessment? And the credit assessment will be backed by other data. So in this case, could be the revenue every month. You can look at how the invoice is another method that you can look at. So we are encouraging our peer-to-peer operator to come up with a credit assessment model which can supplement or complement with an alternative data set, which in turn augment the credit assessment, and in turn come up with a model and price it to risk, and as a result the investor can participate, right? Because at the end of the day, we're passing part of that risk to the retail investors, right? Again, it's all about speed, it's all about smaller amount. Again, we actually see that pattern when we started off. The amount tend to be larger, then because the interest rate tend to be higher, then some of the investors kind of shy away. So a lot of issuers get smarter, right? So they say, instead of 300,000, they do 100,000. Instead of over 3 years, they do a 1-year note, right? Because there's certainty. A lot of micro and SMEs, after 3 years, you may not be able to see that, but in 1 year, so you get a better rate. The investor feels safer. So that's kind of, we let the market decide, and that dynamics is very interesting.
Okay. And can you maybe tell us also how is the coverage in the country, right? So do you have like an outreach program to these, remote places, like maybe I'm thinking Sabah? We've done some work in Sabah where it's, you have packets of remote communities that could probably benefit from this, speed that you're talking about and alternative data.
Yeah, I will be the first to admit that we haven't done sufficiently. I think if we look at the last few months' data, I think we're quite heartened to see 60% of the peer-to-peer nodes are still Klang-Valley centric. So that means 40% are outside. But I think more can be done. Partly this due to, again, we have a fair bit of work ahead of us in terms of how do we expand geographically as well. Part of that is probably because they are more literate, people are more aware of these alternative instruments. Again, we're not advocating from a peer-to-peer financing nodes. It's not for everybody, right? So so there's some level of literacy required. Secondly, there is also a physical constraint. An example could be that because typically we require our operator to do an assessment, right? These particular issuer, how credible they are not, a fly-by-night organization. So there's some level on the ground assessments for that. So on that, if you are too far away from the operators, then there will be some challenges, and more critically, there are costs involved in assessing credit worthiness. So that will be some hinder. And you rightly pointed out, I think we have a Borneo outreach program. We'll talk about the East Malaysia. Today, we're seeing more activities in the south, in JB, Penang. I think we have some East Coast. So we do have, the market is fairly big. We're seeing good growth, good traction with the market. We need to do more.
Okay, right. Very good. But it seems like P2P financing and crowdfunding are contributing to financial inclusion.
We try to do our part. There's still lots more to do. Yeah.
Good. So my development economy is hard. So Glenn, I was actually my PhD was in monetary economics. So I wrote a lot on monetary policy and central bank independence and so on. So I feel like I can really nerd out on this digital currency thing in central bank. So, but I want to ask you, maybe you can also elaborate on that a little, because China did issue a sovereign digital currency last month, right, as a test to a small number of people, right? So which is a big, country that is taking the first step in doing this. And a lot of people see this as them, trying to dislodge the US dollar as a reserve currency and so on and so forth, right? So if all these countries, especially the US and the EU start to get into this sovereign digital currency issuance, right? So how's that going to play in terms of the hard currency that we have? And also how's that going to play in terms of the independence of the institution itself? Because now having to compete with, private institutions and so on and so forth. I think we are running out of time, but I really want to get your opinion about this before we.
Okay, I'll try to be very quick because it's a really interesting question, and I do have some strong opinions about that.
Okay.
First of all, your question about whether it will start dislodging the dollar, as the unit of account, as the means of payment, as the store of value in terms of reserve currencies. I don't think that's going to happen for quite a while. And the reason is that US dollar assets, like US Treasury securities, bonds issued by US, government-sponsored enterprises, US corporations, they're always going to be denominated in dollars. And they're in such high demand throughout the entire world. If you're looking at central banks, their reserves will be held in US dollars for a long period of time. Commercial banks all around the world will invest in US-based assets, and that will, of course, lift the demand for dollars. So if you look at the assets, and one of the reasons that you have to look at the assets is because there seems to be an incredible demand for safe assets, and there is a shortage of safe assets throughout the world. There are a lot of risky assets. There's a surplus of risky assets, and in fact, the entire program of quantitative easing that was done over the last 10 years, to kind of get these economies back on their feet after the financial crisis, was an attempt to encourage people to take the plunge, and to hold risky assets again, because there was that retrenchment into safe assets. And at least for the time being, US dollar denominated assets, particularly treasuries, issuances of government-sponsored enterprises and things, are the most desired. And banks have to have high-quality liquid assets, because after Basel III, there were new liquidity regulations written that require banks to have high-quality liquid assets as a major part of their portfolios. So it's not only central banks, but also commercial banks around the world. But your question about, competing currencies, is actually a very, very good one, because in a particular jurisdiction, let's say you have several different currencies circulating. You may have your own, national currency, your fiat money, which may be digitized, but you also may have central bank digital currencies of other central banks circulating within your jurisdiction, and you may have privately issued digital currencies. The more currencies that are issued in a given jurisdiction, I think the less influence the home country central bank will have over the level of output, employment, interest rates, and all of those things that they mention. And there are, many examples, some pretty recently, of jurisdictions in which multiple currencies have circulated. And, after a while, you could say that the good money drives out the bad money. And so you may return, to the national currency, or, the country simply gives up and adopts the foreign currency as the monetary standard. So I think that does pose an issue for central banks' ability to influence the economy, but also maybe for the independence, because if they no longer can conduct monetary policy in an effective manner where the transmission mechanism, is still robust, then I think you're going to have parliaments and, executives in these countries going, well, why do we even need a central bank then?
I'm a new Cajun economist, so I believe in the impact of monetary policy to steer the economy. So when you say that, real business cycle theorists are very happy. They're going to come back and say, we told you all along the monetary policy doesn't, we could do without it, and so on and so forth. But, I hope that, central banks are not duplicated, at least not in my lifetime.
I hope so too. I like working with central banks too much.
I agree. All right, since we're running out of time, but I have one last question for you, Whitney, and that has to do with wealth management. And I was recently just reading some news about Grab Invest that was just launched in Singapore. Right? So I just wanted to get your take on, maybe if you tell us a little bit about, how would the transition of those platforms into wealth management be in Malaysia? Would there be, barriers and so on and so forth? Because I'm thinking, if it's in Singapore, it's just a matter of time that it comes here to Malaysia as well.
Well, I think, wealth management, I think we have always have there. I think, so I think maybe the question again, when we talk about inclusion, we tend to look at, from our point of view, more investing for the future. I think as an economy, we are aging rapidly. I think if you look at some statistics, by 2030, we will be in what we call aging stage. I think before
we actually just wrote a report about that like 2 months ago.
So we are creating instruments to help facilitate our young people to save early. So part of the whole initiative about whether it's spare change, start early, having a digital medium. That's why I think if you look at the whole, whether it's digital only broker or whether it's a robo advisor side, these are generally, people, the whole demographics is 60% are actually age 35 and below, right? I think in fact some of them are actually even more so. So I think that they actually do one part of the agenda. The second part is, and again, we're trying to fit in our part. This is not talking about, I think from our longer range planning, we're really looking at how advice are done. So I think that part will come. But this year, I think in the mid of this year, we actually released what we call e-services platform guidelines. So this is allowing and enabling people which have electronic channels, so in this case, with a wallet and all, to access to capital market product. Right. So this will facilitate, for example, people who operate one, but if they want to do so, it's a fairly, I would call it a right touch approach. Then they will have access to either money market fund or other capital market instruments or unit trusts and all, using the current existing, go back to Glen's point about big tech, right? So they have a vast reach about the whole investors. How do we bring this consumer and bring our capital market product to them effectively and efficiently? So in this case, is in a convenient, accessible, and affordable way, right? So this is where I think we need to look at not just the channel, but need to have a more democratized, more socialized model. So in this case, can we get into a money market fund in 50 ringgit, 100 ringgit? Can we buy into ETFs, even in the US, in a small, bite-sized chunks that is digestible? So these are the way that we are facilitating, and we hope the market participant more innovation on this, and we are creating the framework that allow them to innovate that way.
Oh, yeah. That's very important, because as you said, if an aging society, saving early and longer would be very, very important. Well, so gentlemen, I've learned a lot from this conversation. I hope everyone that's listening to us have also learned a lot.
I don't know if the three of us talking to each other.
I know we just kept talking to this for a while. But do you have any closing word that you want to say before we go on? Glen, are you smiling? I'm sure you want to say something.
Oh, sure. I'd like to say, to everybody, who's still listening. Well, first of all, thanks to Malaysia Tech Month for giving me the opportunity to be part of this panel discussion, with you, Samir, and you, Wei Min, two very, very distinguished panelists and moderators. I really, really appreciate this opportunity. And I think that as one closing thought, I would say that the digital economy is barreling ahead, and there should be nobody really putting up unnecessary barriers to it simply because they don't understand it. Nobody should say no to innovation because it's scary, because they don't understand it. And that goes for regulators, it goes for consumers, it goes for policymakers, in the general government. Instead, take a look strip it down to its essential parts and say, okay, what are the risks? What are the benefits? Let's take a look at the risks, and we'll tackle those risks one by one. And not exaggerate them or overstate them or use it as an excuse to simply just say no. And I think it's exciting. We've got a lot going to happen in the next 5 years. The pandemic, of course, is accelerating the shift to digital modes of payment, particularly, and maybe other aspects of digital financial services. So I think we're living in a very exciting world, and I hope maybe we can meet next year and see what's happened and have the same discussion.
Yes, I agree with that. And I also want to make a point about, Americans still using checks. My landlord in the US, I had to give him a check every month. Since I've been here, I've never met my landlord. I pay him every month. I don't know who he is, and then that's fine. So that's, I was just sitting here and thinking about that. So it's been great living in Malaysia. It's been great having this conversation with you. Thank you, Glen. Thank you, Wei Min. I hope everyone listening learned as much as I did, and hopefully this was worth the time waiting as well. All right, so long. Thank you.
Thank you.
Thank you all.
Thank you.
Bye-bye.
Now, thank you very much, Mr. Bandaogo and the speakers. That was certainly an insightful session. Now, one key thing really stood out for me as the session went on: the delicate and difficult balancing act that regulators have. Now, on one hand, the regulators cannot be too strict, if not you stifle innovation. On the other hand, they've got to look after, one, the consumer; two, they've got to prevent illegal activity from taking advantage of these innovation; and thirdly, to prevent any systemic risk to the financial system. So with that, we'll be moving on to our final session. And before that, I'd like to thank the audience for staying with us. It is, after all, 5 o'clock. Thank you for your dedication and your time. Now, I'd like to call now Mr. Gopi Ganesalingam, Vice President of Global Growth Acceleration for MDEC, and Karamjit Singh, Chief Executive Officer of Digital News Asia, to deliver the closing note. Over to you, gentlemen.
Good afternoon, and thank you all for for the last 2 days. It's been very, very amazing. Karam, I don't have any prepared notes, but I think I'll have a chat.
Yep.
I just want to say a big thank you, because it has gone beyond our expectations in terms of what we wanted to do, and the kind of speakers that we wanted, the moderators. Many people won't know behind the scene. We put together this whole thing in 2 weeks. So there are a lot of 2 weeks, and Karam, you've been part of it, and a lot of people to thank. But I want to say a big thank you to the folks at DNA, Karam, your folks at DNA, the folks at Knowledge Group, right? Thank you so much. And of course, last but definitely not the least, our team at MDAC, the BSP team and the GGA team, for working tirelessly. And there were a lot of hiccups, but in terms of the stress levels, there were working weekends, long nights, but it was all worth it. But look at it. We came in here. It's a Malaysia Tech Month, the month of November, and these 2 days were supposed to bring out the kind of innovation, the kind of companies, and to say reinvent Malaysia's digital economy. It's like a reset button for MDAC, the reset button for digital economy, new focus, and so the last 2 days was supposed to do that. And we did that. I thought we did that. Look at the kind of speakers that we have. We had Sophie Kamarudin doing an interview with the MDAC chairman. They're on very well at Bloomberg. And today we saw Randy and Serena. And Randy, prior to that, gave us a very, very inspiring speech or a talk to inspire women, inspire entrepreneurship, inspire failure, inspire success. And then coming in after that was Serena, was very, very good. 1.5 hours, didn't feel the time go by.
Wow.
And yesterday we had Raymond Silva, our Chief Marketing Officer, MDAC, talking to the Global Chief Information Officer at Zoom. Amazing. And so the diversity that that came through in the kind of people that were being interviewed. And then Freda with Alexander Stubb, the former Prime Minister of Finland. Then we had Tavi of the Estonian government. And then we had the heavyweight. I like this one yesterday, when Chong from BFM interviewed what we call Face Off with Patrick Grove and Joel. Where do you start your business? Is it here? Is it somewhere else? And one thing a couple of things came to me: build a global business from day one. Don't give a damn about the location. Go where your customers are. Go where your business gravitates to. And that speaks very well of these two gentlemen and many other entrepreneurs who are building their business out of Malaysia. And then we had Alexander Stubb, former Prime Minister of Finland. And then we had Why Invest in ASEAN by Anwar Jumaboy. And we had all the heavyweight, the finance, the guys with the money. We had the Thomases and the Kylies and the Vikrams and the Samir. And I know the message came back very strong that there are good companies in Malaysia to invest. There's money in the system. But we need to be a bit more open-minded. We need to look at tech deeper. Then we had Road to Global Dominance. Very nice. We had 3 larger companies. Coincidentally, they're all gain companies that they're building dominance into the global markets. And so these are not the only 3. We have a few more coming through.
Exactly.
And then building Malaysia's billion ringgit revenue companies. We had Yuan doing the moderating. We had really good nuggets coming out from there. And then I did the Malaysia Digital Hub with the 3 panelists. I enjoyed myself. 1 hour wasn't enough. Then again, I saw Market Access in ASEAN by Chuang. Fantastic. Market Access saying that the markets, the borders have dropped. It's a free market for everyone. And what should we do to bring the market to you? And then we had you, Karam, talking about MTAB. That was interesting. 3 guys who spoke so well and how happy they are and how they move their businesses around and they've settled down in Malaysia. Future of ASEAN's Digital Innovation by Jasmine. Very nice panel. Where is the FinTech roadmap leading ASEAN? This is particularly interesting for me, Karam, because all 3 are gain companies. I know them very well, very close, very intimate, and they are competitors. They were put together and they spoke so well. They were complementing each other. They were complementary to one another. was very well done.
Yeah, because they were each raising the bar. You know, the better you do, because your fierce competitors are, you always need to know what your competitors are doing, right?
Right.
So they were each raising the bar for each other. So they're forced to keep going higher and innovating, right? Working faster, you know, adapting, delivering extra value. It's amazing. Yeah.
And then the last one, I had to come off 15 minutes early to get in here, so I didn't really hear it. But I'm really hoping that the panel was able to discuss how will our Malaysia's regulatory framework look like for the fintech industry or the financial industry or the payment, whatever, finance industry. I'm hoping they covered that, but I have no idea. But you know, it's just not me saying it. I'm looking at the comment, a particular good comment. Somebody even said, a couple of people said, well, I don't believe this is being done in Malaysia. Is this a Malaysian event? So it speaks very well of all the panelists, the moderators, the people. We had, I got the numbers, 22,160 people who joined the entire program for the networking. Amazing number. And over to you, Param. What do you think?
Yeah. No, I think the key word is dynamism, right? You could see, you could feel the dynamism of all the entrepreneurs that were on the panels. Yeah. And that's important. And then that dynamism captures, you know, because all the entrepreneurs are based in Malaysia. Not all were Malaysian, but they're building out from here. So you see the dynamism there. But also beyond the fact is that the region of ASEAN, right? You talk about ASEAN region is just going gangbusters. All the mega trends are pointing to one direction, you know, north, 90 degrees up north, right? ASEAN, increasing middle class, share of pocket, right? For disposable, spending is getting bigger, right? Size of middle class is getting bigger. People are becoming more digital. The infrastructure is spreading out further. And then P2P is and you mentioned it, right? It's democratizing, you use the word democratizing knowledge in your session with the digital hubs, but with P2P and with ECF, you're democratizing investment. And that's very important, because also right now, and that's maybe a limitation right now, if you in Malaysia, you have to be a Malaysian company for the regulators to say, okay, you can go onto a P2P platform or an ECF platform. We got to quickly allow guys like Rene, right, like Sunil, and like Francesco from my panel, right, to be able to put their companies which are incorporated in Malaysia, headquartered in Malaysia, to raise money, because your investors out there are ready and willing to, right? You imagine the pool. So for anyone listening out there thinking of Malaysia, and if you think there's not enough funding here, look at what the panel just before us said, the guy from Securities Commission. He said that they were able to help 2,600 small and medium-sized companies have raised R1 billion on this P2P and ECF platforms.
Yes.
And the average ticket size, investment size, was $100. Actually, 400 ringgit is about $97. Let's round it up to $100. So the incredible amount of people there already willing to take bets and invest in the innovators of tomorrow, maybe the Facebooks and the Grabs of tomorrow in Malaysia at a small level. So you've got way more access to funding beyond thinking I need to only go to a VC or I need to go to MDAC. No. Amazing number of companies, and you follow DNA, you follow Malaysia Kini, who's helping us to also roll this out. You can see the articles there, the stories there. So you're not limited to who you can go for funding. The pool is getting bigger and bigger by the year. And that's a very important point when someone talks about a country, a region, and then within the region, they want to look at, maybe then where's the money? Yeah, you can obviously go to Singapore, which has got the biggest chunk of global money there, but you won't go wrong by looking at Malaysia also, I think.
Yeah, and I like what the World Bank said, that the growing middle class in Malaysia is going to boost the digital economy moving forward.
Of course,
and hence we were quite optimistic about the growth rate.
You can see that already. Just as a micro point, last night at the stroke of midnight, right? So my son wanted to buy a pair of headphones, earphones. And then at 12:30, when he finished through, and 12:20, he clicked to buy. It didn't go through, and we were already willing to deduct the money. And then apparently the 200 devices at that price were gone already. Probably were gone in the first 1 minute, right?
So it's like strange. Yeah, I saw midnight. All my 3 kids in one room trying to buy stuff. So, yeah. But, not everything is good. Some messages were loud and clear. I think the message to me was two things, very loud, very, very loud. Funding, Series B funding, we really need it. We are really good in Series A. We are very good in pre-seed. We are really good in the ecosystem. We have the right products, MTAP, Digital Hub, touching base with companies. But if we do not address that, that's going to be a big stumbling block. And of course, MDEC can't do this alone. We need the whole entire ecosystem to work together. The other thing that came very loud was Singapore. When Patrick said that they allow to use digital signatures so that you could conduct board meetings
at the company secretary level.
So these are things that we need to look at and see how. No, I mean, this is the new norm. People cannot meet in person. So how can we move these things faster? Digital signatures and digital meetings.
Totally true.
Yeah. So
I think let me just mention Sudev Banga earlier, right? Because I think he was asked about, because he's got a regional role, ASEAN head of ASEAN for IDC, and he's based in Jakarta. And he was asked, how does he feel that? Actually, a good question, put him on the spot. How do you find the agencies in Malaysia which are trying to help propel the digital economy versus peer agencies in the region? And he said that the agencies in Malaysia far outpace the efforts by neighboring countries. But you think that's good, right? But it's on the flip side, the innovation moves slower, because then a lot of times your people are helping you so much that they're propelling you up, and it's not your own skin in the game. And he said that on the flip side, it slows innovation, because then it's not all your money, not all your effort in the game. And I thought that was very intriguing, and it's a reminder to everyone to try to make sure that you try to strike the right balance, right?
Yes, I heard that too. I think you need the right balance. If you don't have that help as well, so it's probably a hybrid model, right? So it's not a complete...
No, exactly. And then I think he also liked the fact that now the support in Malaysia is being incentive, outcome-based, right? It's not just blind incentive. Outcome-based is very important.
So, so I thought that was very good. I want to congratulate the team behind this, and to all the participants, to the panelists, the moderators. Thank you very much. And to you, Karam, thank you for that. It is just the start. It is the whole month. It's MTM is the whole month. We've got lots of other programs lined up.
So many more,
So many more. And I'll say thank you so much, and stay safe, flatten the curve, don't go out unnecessarily.
Hey, by the way, next week, Friday, people have to catch you and me. We're going to be on the Tech Talk Friday, right? With Roshan from Leadernomics. You can catch that on our LinkedIn and our Twitter. We'll share the link. Next Friday at 7 p.m. We're going to get Gopi on the show, and then he's going to be on our turf. He's not going to have the comfort of the Klang Valley, vista behind him with the MDEC logo there. And we're going to put him on the spot about what the real value of this 2-day conference is, and what they hope to achieve, and what they hope to deliver for people who are asking for more, for MDEC to do more.
Okay, all right. All right, thank you so much, Karam. Thank you, guys. Good night, stay safe, flatten the curve. Bye.
Thank you very much, Gopi, for your great summary of the event, and Karam for your insights and comments on individual sessions. Now, we've concluded our program for day 2, and by that extension, MTM's inaugural session. Now, once again, let us thank all our esteemed speakers for their ideas and insights on the digital economy amid today's unprecedented uncertainties. While the inaugural session for these 2 days have ended, we kindly invite all of you to continue to be part of the MTM 2020 experience, as the whole month will be laden with satellite programs which you may be able to attend via signing on to your MTM 2020 dashboard. Similarly, you're always welcome to reach out to the event administration via the chat box for any form of assistance you require. With that, we end the inaugural session on a high note. Thank you very much, and good night.
This has been an unprecedented year, accelerating critical digital and tech pivots in a new normal. The Malaysia Tech Month 2020 will highlight the nation's digital innovation leadership, establishing Malaysia as the heart of digital ASEAN. With close to 25-year track record leading the ICT and digital economy growth, the Malaysia Digital Economy Corporation, MDEC, is ready to lead the nation to make the digital leap into the fourth industrial revolution. MDEC has a 3-point winning formula: reskilling and upskilling Malaysians to thrive in the next normal and take the opportunities in the fourth industrial revolution, boosting startups, digitalizing SMEs, and globalizing scale-ups. Fast-track investments into game, animation, AI, blockchain, and more emerging tech sectors. Join us at Malaysia Tech Month 2020 and benefit from the best of Malaysia. Land and expand in Malaysia, heart of digital ASEAN.
Looking for a place to start or grow your digital business? Find a central location where talents converge. Get easy access to regional markets. Operate in a conducive business environment. Supported by robust digital infrastructure and business-friendly government policies. Enjoy high quality of life at lower costs in one of Asia's friendliest cities. Follow your heart to Malaysia, the heart of digital ASEAN. Malaysia is committed to support digital investments as well as to develop, attract and retain world-class talent to power digital businesses in the country. We're among the first countries in Asia to deploy 5G network technology, the next-gen communications platform that offers increased bandwidth at much faster speeds. We also formulated the National Fiberization and Connectivity Plan to improve broadband quality and coverage, as well as reduce prices to ensure no community is left behind when it comes to high-speed broadband access. To support Malaysia's ambition in becoming a digital powerhouse, we have introduced new digital-first policies that drive investments into Malaysia's robust as well as versatile digital and tech ecosystems, while reinforcing the foundations that are already in place. Malaysia offers a fertile environment to accelerate and promote sustainable growth for the nation's digital economy. Businesses, big and small, are supported with a wide range of incentives and development programs to grow startups, digitalize SMEs, and globalize scale-ups. To nurture and build a digitally skilled workforce, MDEC also created a holistic talent development ecosystem with action plans such as nurturing digital skills at the school level through K-12 digital tech programs, partnering higher education institutions to develop a future-ready workforce, upskilling the existing workforce to equip them for the digital economy, easing the work visa process via a green lane facility for key digital talents in emerging technologies, designing the digital talent development strategy framework to address the growing demand for a digital-savvy workforce. All these efforts contribute to Malaysia ranking second in Southeast Asia in terms of future readiness for the IMD World Digital Competitiveness Ranking 2019. With half of Malaysia's population below 30 years old, we are in a great position to support businesses with highly skilled and unique talents who are young, digitally savvy and mobile. Growing up in multicultural and multilingual communities makes them highly adaptable to any business environment, be it in startups or established multinational corporations. These are the people who make up the heart of digital ASEAN. Are you ready to follow your heart to Malaysia?